The rising inflation and worrying financial situation worldwide have all of us pinching our pockets and counting our pennies. But it seems as though no matter what we do, money flows from our hands like water. Well, in this video, we hopefully have a solution for this, with financial guru Mark Bouris sharing his top tips for keeping your money safe during these unstable times. First up, happiness and financial stability are better in the long term. We get it. Buying a new phone or a pair of jeans for your wardrobe gives a dopamine hit like no other. We could get high on that for the rest of our lives. But when the economic situation is as risky as it is, we should prioritize long-term stability over short-term happiness. Mark Bouris urges investors to keep their money in long-term investments, especially if they've already created a long-term investment strategy. There's no need to take the money out to chop and change just because of interest rate fluctuations. This sounds a lot like a rainy day fund, but trust us and Mark Bouris, selling your shares when the market seems low is a bad idea because the market, thanks to capitalist machinery, will always bounce back. Rates of return, though, that isn't the same story. If your investment is good for the next few decades, that's a good sign for you to keep your money where it is and to weather whatever interest rate hikes come your way. Remember, it's all about playing the long game here. Savings are super important. Next, let's talk about cash. As Jessie J once said, it's all about the money, money, money. And considering the situation we're in right now, we don't think she was wrong. Bouris supports the musician in his own way, of course. He says that having cash deposits in the bank as interest rates continue to climb is a viable option that can generate some passive income. He goes on to explain that having cash in a term deposit is a safe and low-risk way to make some cash as interest rates spike. This is especially important for longer-term deposits, which run anywhere from 6 to 12 months. The best part about this is that if you have the funds, some savings accounts actually offer higher rates if they get a regular influx of funds. So remember to do your research and look out for the best deals, but at the same time, know that the same risk applies here as it does with the long-term investment strategy. Once the money has been locked away, it can't be touched, so be careful how much or how little you choose to invest. Next up, let's talk about immovable assets. We're thinking about the property. We recognize that there's a lot of privilege that comes with even considering the idea of having immovable assets like property as wealth, but we still think that understanding how the market works and where the wealthy store their money is important knowledge for when the purge becomes a legal event. We're kidding. Thanks to rising inflation, investors that lease out their property can enjoy higher returns because of the increase in rent charges, and this spike in rent could actually generate enough returns to offset the negative effect of higher interest rates. This deal gets even sweeter when we factor in how the property market is slowly looking more and more attractive, with tight leasing markets and the prospect of higher yields and long-term capital making it an offer most cannot ignore. So if you have the cash, try and grab some investment properties to keep on the market. That's a surefire way to yield a steady cash flow, but always make an informed decision. So ask a trusted property or mortgage manager what they think is the best move to make in today's temperamental market. And now let's talk about shares. The first piece of financial advice that we ever got was playing with shares is risky, and if you do it wrong, you can lose a lot of money. So basically, don't do it. Worry not, because Mark Bouris has come to save the day and reduce our worries. Though he admits that it's always a gamble with the shares market, he also accepts the fact that it also provides some of the highest returns. But in order to make sure that you get the reward we know you deserve, do your research. That means don't make decisions based on past performance because it isn't always the best indicator of what future performance will be like. Plus, study the game and learn the share lingo because a lot of careful consideration is needed when making share selections. As always, ask an experienced share and investment advisor before making rash decisions. Pick their brains. Don't be shy. This is their job. They're here to help you make the best decision possible. Up next, let's talk about bonds. And no, we don't mean the chains and whips kind. Fixed income assets in the form of government bonds, or even corporate bonds for that matter, are known for their reliable return at relatively stable levels. So if you don't want to endure the stress of stock market investments, this one's for you. A quick crash course on government bonds for those who are unaware. It's basically a loan to the government which is paid back with interest. This interest is paid back in regular installments throughout the loaning period or the time period of your bond. Sounds like a pretty good deal, right? It is. The thing is, for those of us who are thrill seekers, this type of investment is seen as boring. But if government bonds are part of your investment portfolio, their strength and reliability can actually help you offset any losses that the share market might incur. That's why these bonds are known as a defensive asset, and we think that they really do live up to that name. In other related news, what else can we do? Apart from this pretty solid investment advice, Mark Bouris had some more tricks up his sleeve. This time, they were related to ways to save money. This is a pretty general trick, but honestly, we think every little bit of information helps, so there's no harm in repeating it. Bouris comes with the age-old advice to keep track of where you're spending every little bit of your money. So that means knowing how many iced coffees, books, or subscription services you've signed up for, and how many of these things you can reduce. It may seem painful and the fast-track way to living a boring life, but trust the financial wisdom of Mark Bouris. This trick that allows you to keep track of your expenses is a helpful habit that will ensure you keep an eye on where your money is going even when times aren't tough. Think about it this way: less money on an iced coffee is equal to more money saved for a holiday. And finally, let's talk about where this blunt advice stems from. Regardless of where we live in the world, all of us have had to embrace new personalities as penny pinchers. But Mark Bouris, the chief executive of the Australian mortgage brokering business Yellow Brick Road, gave this advice to the inflation situation down under. Confused? Let us explain. Basically, the Reserve Bank of Australia has increased interest rates to 0.85%, making it a whopping increase of 50 basis points more than what economists thought it would be. This comes as a super shock to Australian and foreign economists, especially since back in May, the interest rate was at the incredibly low 0.1%. In response to this, Bouris has been encouraging Aussies to get off their backs and to look into refinancing their homes, reevaluating their mortgages, and checking if they can save any money through any of the methods we just talked about. In his own words, he wants Aussies to get off your tush and do something about it straight away, especially when it comes to looking into other financial options to save a bit of cash. From his perspective, there's no point in sitting around and complaining about rising interest rates when, through actively researching and looking for better refinancing rates, homeowners in Australia and the rest of the world can save hundreds of thousands of dollars. It's not all bad news though, because according to other financial experts, this interest rate crisis in Australia could actually lead to a drop in housing prices. This is because the higher the interest rate, the lower the borrowing power across the board. So that means property sellers will have to sell at lower prices too. If you've ever wanted to live in Australia, now's your chance. Of course, his direct advice was for his fellow Aussies, but we argue that it's fair game for everyone, especially since dire interest rates are plaguing economies all over the world. So hunker down and get ready for the long haul. We're going to need all the financial advice that we can get. That's a wrap for this video. What do you think of Mark Bouris's advice? Do you have anything to add? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.